What's going on in the mortgage world? It's rates. Rates are still low, aren't they?
Rates are low, and they've gone lower since the last time that we've spoken.
Oh my gosh. Good.
Hard to believe, isn't it?
It really is, because they were down from a year ago.
Yep.
And they're still, that's great.
So we've seen rates touch on the fives, go into it depending on what your credit score and personal situation is.
Mm-hmm.
And now we are starting to see rates as low in the low fours and even almost touching the threes. So it's pretty nice.
Really?
Yep. So we're actually, it's nice when you tell somebody when you qualify them that, hey, your rate's going to be maybe 4 3/4, and you come back and tell them it's 4 3/8. It's just nice to be able to say, hey, it's less.
Wow. And that means you can afford more. Maybe things are going to be a little less stressful with the payments.
Maybe you can buy a little bit more house. Maybe you go up the extra $50 a month. You know, and about every $10,000 in sales price is about $50 or $60 a month in payment. It could make a big difference.
A huge difference. And that's great news, because so many people got shut out of the market last year because inventory has been so low, and they're frustrated, and they made lots of offers. But now I'm so excited to talk to my buyers and say, hey, listen, you didn't get a home last year, but guess what? You can get a bigger home or maybe a more expensive home this year and pay the same amount.
That's exactly right. So, the ship seemed to sail a little bit, and now it's come back into port. And the really good news, I was at the Greater Cincinnati Mortgage Bankers meeting this week, and they had a national speaker who was speaking about rates and what the forecast was for 2020 and 21. And it was nice to see that we think that rates are going to hit even a little bit lower than where they are now.
Oh, jeez, I can't believe it. I mean, we were just talking a year ago that rates are going up 5.5%, 6%, and it's not going to happen.
Well, because there's a looming recession, and remember, everything happens on what they think is going to happen, not what actually happens.
Mm-hmm.
So, will we have a recession? Are we in one? I don't know. I'm not smart enough to forecast that stuff. I just look at what we have today. So, we might actually see rates drop down a little bit from where they are now. And then even going forward, if they do go up, they're going to go up to maybe about where they are now. So that's not a bad thing. That gives us 2 years of a really great purchase market. And for those of you who had higher rates, maybe you're not in a position to refinance today, or you'll want to do it some other time. So.
And always look at your rate and see. So you help people figure out if they had a rate last year of 5.5.
Yep.
Let's just say they were at the top of what it was last year. 5.5, but now they can get 4 1/4 or something like that.
Well,
I mean, that's something you're going to figure out. Does it make sense financially?
Well, absolutely, because you want to look at what the cost of refinancing will be.
Right.
And maybe you paid mortgage insurance back then. Maybe you can drop your mortgage insurance along with lowering your interest rate. And then I always ask, what's your goal of this? Do you want to lower your monthly payment? Is that what you're looking to try to do? Many are. Or are you trying to build wealth? So when you move to that next house, you've got more equity in your property, and you pay that loan down faster. So somebody in that situation, if they're going down a full %, I at least show them the payment for a 20-year. Their payment may stay just about the same, but if you're knocking 8 or 9 years off your loan and it's not affecting your budget at all, why not? If you've been in your house for 6 or 7 years and you've been paying mortgage insurance, maybe you can go down from a 24-year loan, if you will, left to 20 or 15. Or whatever fits your budget. So, if you're gaining equity, that's never a bad thing, because when you do come time to sell and you call Michelle and list your house, then you've got more money to put down for your next property.